Good afternoon. This is Ron Brown. It's Saturday, the 6th of May. I'm going to do a short market report, and I want to talk a little bit about this upcoming webinar series that I've been promising for a long time, and I'm finally getting around to putting it together. Anyway, here's what I have in mind right now. The series is going to be open to anyone who wants to attend. And the reason for this is we want to demonstrate the power of HDSI and Thinkorswim to a wider audience. And this is the way I'm going to go about this. I'm going to record a weekly video on a specific subject using the software, some area. And I'm going to cover a lot of areas. This series could go on for several sessions. But I want to do the video first, give everybody a chance to watch it. I'll probably do them on Saturdays and then get it out to you. And then on the following Thursday, I'm going to have a Q&A session at 2:30 p.m. and it could last a half hour, could last an hour. But rather than doing the webinars live, I want to do the question and answer session, because if I do a live webinar, there are always interruptions. I lose my train of thoughts and so on. So I want to be very concentrated or fixed on my subject matter, and I'll do that with the videos that I'll produce weekly. Insider Club members can pay $100 to get my latest files. The live sessions will be recorded and distributed to everybody. Now, if you just want to come and watch, you don't want my files, you want to make your own, you don't have to sign up. But to get the most from the webinars, you can pay the $100, which, as you know, is very inexpensive for what I'm going to be showing you and giving you. But that's up to you. I do not want to restrict it to people who just pay the $100. I want everybody to see these videos and what you can do with HDSI. But to get the files, and I'll update those files each week as I talk about certain subjects and add charts and so on, you'll get the updated files if you've paid the $100. And ultimately, when the webinar is over, if you haven't paid the money, all Insider Club members will get the finished files. I'm going to cover everything from setups to risk control and demonstrate my daily process. The webinars will focus on showing you how to determine a list of the best candidates to create your own watch list. And when the webinars are finished, like I said, all insiders will have access to the files. Now, I just compiled this list today. Some things may change, but that's what I'm thinking right now. Okay, standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you don't have HDS Investor software, you can download it at highgrowthstock.com. Get a free 30-day trial. You're going to get files which are included right now. They will not be. There'll be some of the files that I'll be using during the webinar series, but I'm going to have a lot of new material also. So let's go ahead and take a look at this market. I'm going to start here with my blank screen. I'll click on the designer. I'm going to go into my market analysis user groups. I'm going to click on the number 1 folder. It contains all of these markets and some ETFs. I'll click through to the warehouse view, and then I will go up to my top-down process scans 107. Actually, I'm going to start using these files that I'm going to be using for the webinar. I haven't changed much yet, but I have changed some things. I'm going to go into the first folder. I'm going to click on top-down analysis major markets. I'm going to sort on the raw combo, and this combo sorts according to the percentage price change 1 day. And looking at this, you can see these small caps, the IQY. This is a symbol With bar charts, it was up 2.4%, followed by the NASDAQ Composite up 2.2, and then the SOX up 2.2, and so on. So a very good day going into the weekend. Now I'm going to concentrate on the NASDAQ Composite like I normally do. I'll bring this up. I'll just double click on it and a chart appears. And now I'm going to go up to my market charts. First of all, I'm going to start with 1A, and the reason I'm doing that is I want to show you that the NASDAQ or the composite is outperforming the S&P 500, and that's represented by this blue line. So the strength has been in the NASDAQ composite over the past several days. I'm going to go back up to number 1, get this out of the way. I'm going to use my alternate C key and bring up a crosshair. I want to point out where we are. We're right at resistance again. This is a triple top here, but if we go back to this point here, it's actually a quadruple top. So until we move through that area, we're still stuck in a trading range, even after Friday's big move. Now, let me bring an arrow here, and I want to point out that volume on this big move up, this over 2% move, was less than average. Advancing issues versus declining issues. If I bring up my alternate I key, get this information right here, scroll down, you can see the advancers were 1,540, and the that's not right. I'm on the wrong day. Let's do this again. You have to make sure you're on the correct day. Advancers 2385, decliners about 800. So 2400 to 800. It's about 3 to 1 on that. So for such a big move, not a massively strong day as far as the internals. The new highs were 64. The new lows were 56. You can see that dropped off sharply on the number of new lows, but the number of new highs didn't really shoot up that much because, well, there just aren't that many new highs, many stocks making new highs. What did I say on this? Make sure I'm on the last day again. 64 to 56. But there was strong buying pressure based upon the candle. There was a gap up. The opening gap, if you look over here at the far left, was 0.92. So the opening gap was nearly 1%, and you can thank Apple for a big part of that move in both the S&P 100, 500, and the NASDAQ, because they reported better than expected earnings, as they usually do, and the bulls were ready to buy and the shorts had to cover. The thing that concerns me most is that volume was not all that great, and this quadruple top. Now I'm going to look at a few other charts. I'll go down here to actually the one with the McClellan Index, number 1C, and you can see the McClellan Index is down here. Here's the advancers versus decliners. So we have an index up here getting ready to break out, but going back to this point right here when the market was moving up, you can see the number of advancers versus decliners based upon the McClellan formula was much higher. So we're just not seeing that really strong breadth yet. And if it breaks past here, we may. But like I said, it's a concern. Let's go down one more. New highs versus new lows. You can see the new lows dropped off sharply. You can really see the lack of volume here too. Here's the fan. The index itself is in a fan uptrend with the 200, the 100, the 50, and the 18. So it's up, but it just cannot break past this resistance area as of yet. We'll see what happens next week. And then here's the advanced decline line, and you can see that even though the index has been relatively flat here in this trading range, the ADs have been going down for quite some time ever since this point right here. So the breadth is not great, and I would be cautious. Now let's move along here, and I'm going to go into my major market indexes, and I'll just go to the S&P 1500. That's broad. That's a good representation of the market. And now I'm going to switch to my HDSI index charts, and I want to look at the percentage of stocks above their 20, 30, 50, and 200-day moving averages. And this index represents a good cross-section of the market because it contains the 600, the 500, and the 400. And you can see that with the weighting, these are indexes that are based upon all the stocks, and I use a market cap weighting. And you can see that this is well off of its high based upon the number of stocks above the 20-day moving average, the 30-day moving average, the 50, and the 200. Put this right here. I'm going to bring this window up with my Aldrin I key, go to the last day, and it tells me that the percentage of stocks above the 20-day moving average is 43.33. Now back here at the high, you can see when the market was stronger, it was clear up at 75.56. And going down the list here, the percent above the 50 was 39.27 at that point. Let's see what it is now. Above the 50, 43.26. So the stocks in this S&P 1500 have really not shown great strength yet. But this is not to say that there isn't a lot of strength in this market. There is. You just have to really be selective and locate it, and that's why we have the ability to do our scans. And I'm going to just get away from these charts. I've been cleaning up charts, renaming them, and I have a set of white charts and black charts. I prefer the black charts, but there are duplicates. There will be duplicates of the white charts, which look exactly like the black charts. And I'm just going to go to a basic daily chart and get away from the market analysis, looking at the broader indexes, and I'm going to take a look here at some stocks. So my conclusion is there's strength. There's strength without volume. We've got a quadruple top we've got to get through. Every time it's come up to this area, it's fallen back. And, what's going to drive it higher? If you just think about what the situation is with the news, the upcoming potential default of the U.S. government, inflation, interest rates, and so on, you would think there's no chance for it to go higher, but you're always going to be able to find stocks that are moving up. I'm going to hit my alternate space bar, and I'm going to go to a different view here. Go down to my daily prospecting scans and click on end of day. And just this view right here is going to bring the strongest stocks as of Friday, or I should say some of the strongest stocks, to the top of the list. Now I'm going to take this down. I'm going to open up another chart. And this time I'm going to go to a weekly chart with support resistance lines on it. I'll get rid of this crosshair. And let's just take a look at a few of these stocks. Now, Royal Caribbean, if you look across here, you see the volume was high, the spread was wide, and the close was very high. It passed over the 3 through the 6 days ago. 0 is always a crossover day. And the volume point of control 7 days ago. The relative strength rank is 91. Kirkpatrick relative strength is 96. It's outperformed the S&P over 5 days by 16% and 20% over 10 days. And here is the one-day change, the beginning of the week, the closing range, and so on. And we all know it's a cruise line. Here's the industry group up 5.14%. Now let's take a look at this stock. And here is the weekly chart over here. Here's the daily, and this is just a base chart. Now, for the new webinar files and for the files that will ultimately be released to the Insider Club, I've made a few changes here because what I want to do is I want to have a way to go down through a potential stock purchase and look at different views. Now, one thing I've done, I'm going to just bring this up for now, and if you look here, here's an earnings date, here's an earnings date, and here is expected earnings, and this is the same information that is up here. For example, 12/22, the earnings were minus 112, and if you look down here, you'll see that that corresponds with this, and you can see what happened after the earnings. Here are the prior earnings, 26 cents on 9/22. You can see what happened after earnings. Now, this is projected earnings, current quarter estimate at 155, which is 133.92% greater than the same quarter in the prior year. And this is in red. These are blue because these earnings are out. Now, Royal Caribbean did report on the 4th. And let's see, this is the 2nd. So here's the 4th right here, which was Thursday. So there must have been some news leakage or something. What happens is the earnings come out and then they go into the database and then they'll be in these fields up here on Tuesday. But I know the earnings came out and I'm going to do an alternate in for news. I go to bar chart primarily. I'm going to log in. They have an ad-free version now, $60 for 2 years to get rid of the ads, and I gladly paid that to get rid of the ads. But you get a lot of really good information here now. I'm just going to click on news and headlines. You can see here's the earnings call transcript. A stock up on first quarter earnings and revenue beats. You can come in here and read about it. I'm not going to, but these were the anticipated earnings, and these can change, of course, but earnings did come out, and you can see what happened to the stock. Now, the problem with this information now is, if you look at this, it's at resistance here all the way across here, and here it's extended. You have to think about the intrinsic risk. What is the risk? Well, the risk is high now, even though this looks really strong because of resistance, and it's already made a big move. Now let's drop down to a different chart here, and this is what I'm doing. I'm going to put this into context. I'm going to use a context chart. I'll start with the 3, 6, and 18. And by context, I mean I'm looking for relationships to the moving averages. I'm looking for crossovers of the 3 and the 6. I'm looking for pocket pivots, and I'm looking for volume point of control. So going back here, you can see on this day, the 3 was still below the 6, and then it crossed over on this day. The same time there was a pocket pivot, and the volume point of control over a 10-day period turned positive. It was actually positive the day before. and the 3 went up through the 6 with an effort to rise. If you're going to buy a stock like this, you want to buy it on that day. And these come up on screens all the time. And here is the group starting to move up too. This is the industry group, which is cruise lines, of course. If you look at this chart, you can bring this down and see where the group turned. And where did it turn? Okay, here's the crossover day. It turned on that day where there was an effort to rise. This is considered a low risk entry. Yeah, it's a big move up, and it would be better to buy it the prior day or, of course, on this gap up on the low of the day. And if you trade pre-market, you can see these stocks moving up early, but the signal came that day. VPOC was the day before. Here's where the buyers are all coming in. And people that don't believe in using volume for a confirming indicator, I don't understand, because when there's this kind of activity with the pocket pivots firing and the 3 going up through the 6 plus a VPA flag and the group turning up, those are putting odds in your favor. And I forgot to mention the volume point of control. Now let's go down to one more context chart. You don't have these charts yet. I'm making modifications. These are going to be for the webinar, but this is the same chart, except I've added not only the 3 crossing the 6, which is a micro trend. The short-term trend is here, the 6 and the 18, and the intermediate, the 18 versus the 50. So the 3 crossed the 6, and then on this day, the 18 the 6 crossed above the 18, and the 18 didn't cross above the 50 until here. You know, that's too late. Your risk is high, really high up here. Your risk is much less down here. Now I'm going to go back up to the number 1 chart. I'm going to do an alternate 1. I'm going to do an alternate A just out of curiosity. I'm going to click on the R tool. And let's say you didn't get the signal until this day. And you put your stop below this, and you're going to buy when it surpassed the high of the prior day. That risk was only 5.93%. I mean, it looks a lot worse on the chart, but the risk was 5.93%. So it's not bad. And let's say I didn't take this stock. I wasn't paying attention, unfortunately. But let's say that you bought it right there and you're still holding it. What is the percentage gain? 14.5%. If you look down at the bottom, it's very small over 4 periods. So it's up nearly 15% from that buy point. Now this would be a little bit scary right here, but you really need 3 bar reversal before the trend changes. So the trend has remained up. Direction was down on these 2 bars after the opening gap, but the trend was still up. Okay, I'm going to be talking a lot about these processes a lot during the webinar. Looking for low risk entry. That's pretty much going to be my theme of the webinar series. So you can see if it were taken on those days, this would have been a good trade. Now let's go down here and let's look at some of these other stocks. Here's one where they were both crossing over on Friday. I haven't looked at this stock. High, wide, very high, 0, 0, both crossovers on the 3 and the 6, and the the VPOC. Group was up 2.14%. Commercial real estate outperformed the S&P over the past 5 and 10 days. Now let's look at this. Well, this is a gap up. Let's just go down to the next one, end of day statistics. This is another chart that I've modified here. You can see the percent gap is 3.2%. This is a relatively expensive stock. This had to be an earnings report. If you look over here, you can see that the trend has been up for the week. Here was the last downtrend, and there has not been a 3-bar lower low on any of these, so the trend has remained up all of this time. Okay, so yeah, there's a gap here. The trend is up. There's strength. Let's make this full size. I'll go back to chart number 1, and I'm going to bring that tool up again. So let's say it gapped open, and let's determine the risk from here to the opening gap. Only 3.85%. Now let's say you waited for it to clear resistance right here, a high 100.80, that's only 5.4%. These opening gaps are scary, no question about it, because, you know, in a weak market you can really turn around and get hammered. But with the strength in the weekly chart and the gap, and let's see if there were earnings, alternate in. Go to the news. Here's the earnings snapshot right here. I guess they agree with me. Recent trend in AAON is your friend. Here's why. And they reported on Thursday a net income of $36.8 million. It doesn't say what the expectation was, but you can tell by looking at the chart that it certainly beat expectations. And with this trend in place, is an extremely strong trend. And here's your crossover. If I go back down or go down to the context, I'll do the 3, 6, and the 18. Do an alternate 1. Put the crosshair on. You can see that the VPOC and the pocket pivots turned positive, and the 3 went above the 6. Here's an effort to rise, and it's out to a new high. Look at this, out to a new high. I'm going to do an alternate 2, 3. It's an all-time high. So the trend is definitely your friend. The earnings are good. Even though this is gapped up and it looks like it's gone, it's certainly worth considering if this market stays strong. Look at the group turning up. Now let's go down and let's look at the this context chart. And you can see the fan is in place, which is another great indicator of trend, because there's the 200, the 100, the 50, the 18, and there was just this slight pullback, and the 3 right here, 3 went below the 6. You can see it was going sideways after this effort up. Here's a test, a couple of negative EPA flags, a test, and then a pullback on these 2 bars here. Well, volume was above 90, the 90-day moving average, so it didn't really go quiet, but it didn't fall far either. And then when earnings came out, that was an earnings surprise evidently, and it could have been taken after the gap. Before I go, I want to show you the next chart. I put those files up for Gil. I decided to add a chart here with all of the same indicators, but rather than having the group up here, what I did is I put the force indexes in. And based upon the force indexes, this stock on the 13-day average has been green since back here, this effort to rise. There was a pullback on the 2-day force on these 2 bars, and then it turned positive again, but the 13 stayed positive all the way. This is an average of 13 days of the force index. So just using that would have kept you in a stock had you been in it, had you taken it from this effort to rise right here. So I've got a lot of context charts that I'm going to be using in the webinar series, and the whole purpose of these is just to take us through a sequence looking at a naked chart, and you can turn the VPA flags off if you want to. Move down to an end of day, same chart but with end of day statistics. This one has intraday statistics, and then this is a comparison to the S&P, what the stock's doing compared to the S&P. You can see it's moving up. And then this window here is the industry group is green, what the industry group is doing, and I'm sorry, the cyan is the industry group. The green is the strength versus the industry group. So if the green is going up, it is outperforming its industry group. Can't see it very well on this chart, but now you can. With the green going up like that, tells me it's outperforming the industry group. So I'm just trying to give a sequence of naked charts and then going down through the context that is to the moving averages primarily, and then the force index, and then 2 weekly charts. And all of these charts are going to be duplicated in the white charts, and I'll be doing a lot of this, going through individual charts and stocks, looking for buy points, looking for using scans like this where there are crossovers or pre-crossovers, looking for low risk entries. That's going to be my whole, well, not my whole, but one of my primary goals for the webinar series. This went a little bit long. I'm sorry about that, but thank you for listening, and I'll get information out this coming week about how you can sign up if you want to take the webinar series and also get the files. If you just want to take the webinar series and no files, make your own, that's fine. But it's time for me to do this. Thank you for listening.